Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Tuesday, October 7, 2014. Daily chart of the SPY, and you'll notice I have a purple line drawn in here, and we'll get to that in a second. But basically, it was a pretty good thrashing today in the markets. Everything was down for the most part. Some of your market leaders like Google was down hard. Tesla held up a little bit, but most everything was down and down pretty hard today. Energy was down. Oil finished down at about 88 and a half as we speak now. This is in the evening session. So basically it was an all down day. And, where are we? So, we broke that trend line I talked about several sessions ago, right? That was up here. Once we broke that, it was game on. Okay, we came back to retest it a little bit, or retested the 50, and now we're down again. So what do we have? Okay, so I've been telling you that we have two eclipses this month, and the first one is tomorrow. And last night I told you that the eclipses have a tendency to make a pivot point or a turn in the market. However, they can also act as we'll call it an accelerant. So the market could certainly accelerate tomorrow to the downside, or it can turn, and this event takes place before the market opens. It takes place, I think it's 6:40 something in the morning. So you may see the market, if you're watching the futures, you may see some movement there around that time. But today's move could have been part of that bigger picture. That's why I'm not sure what's going to happen tomorrow. If I had to take a guess, if I had to say what's going to happen tomorrow, you have one shot. It would be, I think we're going to open up down, and I think we're going to reverse at some point tomorrow. I'm not saying reverse for good. I'm just saying I think we'll dump out in the morning, and then I think we'll find some support. And that brings me to this purple line. So this purple line is drawn in precisely at, this is the SPY, so it's 191.90, okay? And the reason I drew it in at 191.90 is because my work tells me that there's a good level of support at, basically it's 192, but we'll usually pierce that level by a little bit on the way down, and it should hold. And it may not hold all day, but it should hold at least on the first hit. That's for sure. That's my anticipation anyway, if we do get down there. If we break it, okay, so say we hit it and then we move sideways for a couple of hours, could we go lower? Yes, and the answer is we can go lower. We're in that point again where the market is stretched like a rubber band. So it's either going to snap back pretty soon, at least for a couple of days, to relieve some of this oversold condition like we did here. Okay, we snap back, we reverse during the day, we have another big up day, and then we had another up day, but then it reversed. Okay, so the same thing applies. I mean, we should find some type of support tomorrow. And if we don't, then we could be in trouble. So we'll play it by ear. We'll see, your next level is going to be this double bottom here, right around this 200 period moving average. That'll act as support. And if that doesn't hold, there could be another 4 to 5 points in the SPY or another 40 to 50 points in the SPX on the downside, down to this level here. So we'll take it one day at a time and we'll see what happens. But that's my anticipation for the market. Now let's take a look at the IWM, because that's been weak and that's been leading us in the correct direction, okay? And it finished at the lows today, and that is, and so did the S&P, but this is real low. And basically the 108 held for a couple of days, all right, but then and then we bounced off of it, and then we broke it today, and the next stop could be 106, maybe even 105. Okay, let's take a look at the weekly, and I'll show you where I come up with that level. Okay, 105 is right here. Okay, there's a lot of support in here. It starts really today at 107, okay, roughly, and then 106 to 105, right in this neighborhood. See these pivot highs at 105? Okay, this is solid support. This pivot high, these pivot highs, this pivot high. Okay, these pivot lows, that's a wild amount of support here. So 105 should be good support for the IWM. So that should give us an indication. You always want to look at something other than the market you're looking at to kind of get confirmation. So, for example, the transports were drilled today. The broker-dealers were drilled today. Everything was drilled today. The Dow was down 275. The NASDAQ was down. The NASDAQ composite was down 69.5 points. It was just a big down day. So we'll see what happens. All right, let's move on and let's take a look at gold. Gold didn't do anything today. GLD was up 33 cents. The gold futures, as we speak, are up 60 cents at 12.13. And I've been telling you that I don't like gold. So I know people don't want to hear it, but the numbers don't lie. And gold should have bounced again today with the market down and the fear trade and all that nonsense. It didn't. Guess what? There's deflation in the air, and gold is probably going lower, and I wouldn't look for a lot higher prices in gold. Until and unless we get above 1250 on a closing basis, even on a weekly basis, I'm interested in telling you that gold is going lower, so beware. Buyer beware. Okay. The oil market, I already talked about. I'm still looking for the mid-80s, 85, give or take $1 in the price of crude. That brings us all the way down here in the 32 neighborhood, maybe 33 in USO. So there's nothing to do here. I mean, you can be short USO if you want, but you're going to get some bounces along the way. I would just wait for it to get down here, and we should get a nice rally off of that, and we should be able to play some energy stocks off of that as well. Check out the bond market. This is TLT. Okay, this is the proxy, the ETF proxy. This is the weekly. This is the ETF proxy for the 20 to 30 year Treasury bond, and we're right at these highs. I wouldn't get in front of this. This is a freight train. Yields are going lower. Here's the 10-year. 10-year at 235. Probably going to come down here below this double bottom here at 230. That's my guess if the market continues lower. If the market continues lower, money rushes into the bond market, treasuries rally, yields get pushed lower, and that's kind of the way it works today. There will come a day when higher yields put pressure on the stock market for other reasons, but right now it's the same old, same old. Yields lower, bond prices higher, stock market lower. You know what? Let's take a look at the VIX tonight because it's worth mentioning. See where we are in the VIX. Now we're up at these highs. So if we're going to have another spike up to, let's say 19, let's go to a longer term picture and see where we are. All right, so on a weekly basis, we're right into this 200 period moving average, and this should tell you that the market is extended. Not to say we can't go higher in the VIX. We certainly could. Look what happened here. We pierced through the 200, pierced through the 200, pierced through the 200, closed above it, and then the next week we were way down, which means the market was way up. Okay? This was July. All right, so this is the end of June and the beginning of July. Okay, 2013. All right, so here we are again. Now we can certainly get above it, and I wouldn't suggest we won't. But if we do, you have to look for a short-term low in the market. If we're going to get above this line in one shot, we're not going to get above it in one shot and stay there for the most part. We're going to have to kind of get some sideways, consolidation going on in order to push above this 200 and sustain that. So that's where we are. Let's look at even longer term picture of the VIX. I like the VIX because it's a really nice proxy for the market. Look where we are. We're really, really high as compared to where we've been. Now, obviously, because of the pressure on the market, we deserve to be high in the VIX. I get it. However, you have to say that, nothing moves in a straight line, so we've got to be getting closer to some kind of short-term rally in the market. That's my take. But it may not happen tomorrow, so I'm just telling you what I'm looking at. I'm showing you what I'm looking at. And these are the things. What else do we want to look at? Anything? We talked about oil. We talked about gold. We talked about the bond market, stock market. I think we pretty much got them all. All right, this is David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.